Hello everyone, this is ACCA Amit Kumar and I am here to discuss with you Ind AS 116 leases topic. Ind AS 116 leases topic, sales and leaseback transactions. So Ind AS 116 is the new standard for dealing with leases. So this has withdrawn Ind AS 17 leases. This is applicable from 1st January 2019 globally in the form of IFRS 16. In India, this is applicable from 1st April 2019 onwards. So new leasing standard has moved on to the concept of rights of use. So there is a change in lessee accounting. Lessee accounting now only deals with rights of use asset. Now whether operating or finance lease, now under Ind AS 17 there was a concept of operating and finance lease. Operating leases and finance leases, we have to define between these two categories whether they are operating lease or whether they are finance lease. Now this concept of bifurcating in operating and finance lease has gone away with the introduction of Ind AS 116 leases. The impact of this is that the operating lease was sometimes used as an off-balance sheet financing structure with sale and leaseback transactions. With sale and leaseback transactions, sale and leaseback transaction, this was used as a off balance sheet financing item. So on one side the entities were selling their assets, de-recognizing it from the balance sheet, becoming cash rich, and at the same time after receiving cash proceeds from the sale of this transaction, they were entering into sale and leaseback operating leases resulting in improving the return on capital employed. Another reason for introduction of Ind AS 116 was there were many entities who were not recognizing the asset as finance lease, and through the terminology used in the contract they were able to show it as part of operating lease, and mainly it was being done by the airline industry. Airline industry, on one side an airplane was sold and revenue recognized by selling company. The buying company, instead of recognizing it as part of PP, they were through their lease arrangements were able to keep it off balance sheet and presenting as operating leases. At the same time, they were also able to hide their liabilities in regard to operating lease. Now imagine the aeroplane which has been sold by one entity, the other party has received it, but it is not landed on their balance sheet. So where is the aeroplane? So the chairman of ISB, the former chairman of ISB, Sir David Tweedy, had this dream that he wished to fly in an aeroplane which is recorded on the balance sheet. and that day actually turned into a dream coming true on 1st January 2019 globally and in India through Ind AS 116 leases. This dream is coming true with Ind AS 116 leases implementation from 1st April 2019 onwards. Now, sale and leaseback transactions are no more an off-balance sheet financing structure, because the only way now a lessee can record assets or lease arrangements on their books is through rights of use. The only exceptions to this rights of use classification are low value items and leases with a term of less than 12 months. All other leases will now come onto the balance sheet. They'll be presented onto the balance sheet. So this is a concept known as rights of use asset is being presented onto the balance sheet, which is a combination of direct cost plus present value of lease payments this reduces with any incentives. This also includes any cost of dismantling, restoration, required at the end of lease term in today's value. This is normally depreciated. This rights of use asset is normally depreciated over shorter of lease term or useful life. On the other side, this right of use asset, on the liability side, they are recording present value of lease liabilities dividing it into current and non-current distinction. The lease which they are liable to pay within 1 year, the lease which they are liable to pay beyond 1 year. So the off-balance sheet financing structure which was being used as a creative accounting medium is discouraged, and the only way lessee can account for leases is now presenting it onto the balance sheet. Now this is moving on from an off-balance sheet item to an on-balance sheet item. Both the asset and liability are recorded at the same time onto the balance sheet. Now this has also impacted sales and leaseback transactions. The sales and leaseback transactions, as I said, was being used as a medium, as a off-balance sheet financing structure, which is discouraged through introduction of rights of use asset. Now when we are dealing with sales and leaseback transactions, we need to see whether the transfer is a sale or whether the transfer is not a sale. When we are dealing with sales and leaseback transaction, we try to see whether transfer is a sale or transfer is not a sale. If transfer is not a sale, then it is treated as a secured loan under Ind AS 109 financial instruments. So whatever money the entity is receiving, they are receiving as a loan and they'll be liable to pay back this money, and this is accounted for under Ind AS 109 financial instruments. But if the transfer is a sale, is the reason, that's one of the reasons why Ind AS 116 is implemented only after Ind AS 115 revenue from contracts with customers is implemented, so that we can apply the provisions of a sale, that it meets the definition of a sale, that there is a contract, the other party has accepted the asset. So if it qualifies as a sale, we record a sale, and this transfer is a sale is resulting into leaseback transaction, which is resulting into leasing back the asset at market terms, below market terms, and above market terms. So there are three situations which arises because of leasing back the asset. If they are sold at market terms, then we normally record the sale. So the entries we pass are, we record a sale, we receive cash, we de-recognize the existing carrying amount of asset, and we record rights of use asset, and if there is any gain or loss on transfer of this asset, we recognize that gain or loss as well. If it is below market terms, then a question arises that why would someone agree to enter into an arrangement? Why would someone be ready to sell something at a lower rate than the market price? So if the entity is receiving a lower price than the fair value of that item in the market, so this is considered as prepayment of lease. We'll discuss this in detail, what is prepayment of lease. And if it is being sold at above market, now again the question arises that why would someone agree to pay more than the fair value of the asset which we are giving away as part of the sale and leasing it back. So the other party is ready to give more money than the fair value of the asset, the reason being additional financing. The reason is additional financing, that we treat it as an additional financing. So what is the role of it? So the common entries which we'll be encountering in sale and leaseback transaction will be recording a cash for selling the asset. We'll be recording rights of use asset, which will also be debited as part of our balance sheet. On the credit side, we'll give away the asset. We'll de-recognize the carrying amount of the asset which we are giving away. We'll record present value of lease liability. And any gain or loss on transfer. So if we are selling it at market terms, below market terms, above market terms, definitely we'll be able to sell it at good market terms. So we'll record gain on transfer of asset. If there is a gain, we'll record a credit. If there is a loss, we'll record a debit. So these are the normal entries we will be dealing with. I'm writing them in advance so that since all our accounting will revolve around this, so it's better to understand them in advance so that we deal with them easily. So first I am picking up sale and leaseback at market terms. Sales and leaseback at market terms. Suppose carrying amount of an asset is 6 lakh. This is sold for, selling price of the asset is 7,50,000. Fair value in the market is 7,50,000. So this is being sold at market terms. The present value of lease liability agreed upon to lease back this asset is say 7 lakh. Now we need to fill these amounts. Now looking at the situation, if you notice, we received cash of 7,50,000. Rights of use asset we need to calculate. Carrying amount of this asset is 6 lakh. Present value of lease liability agreed upon is 7 lakh. So there are two things which are remaining to be calculated. One is right of use asset and one is the gain on transfer. Now looking at this, can you tell me that if the carrying amount of an asset is 6 lakh, the fair value of the same asset is 7,50,000 in the market. Now instead of paying 7 lakh in today's terms for an item which is having a fair value of 7,50,000 in the market, we are paying only 7 lakh to lease back the asset. So if you are paying 7 lakh to lease back the asset when the market value is 7,50,000, it means that we are not buying back the entire asset. We are not leasing back the entire asset. I'll not call it buying back. We are not leasing back the full asset. That means a portion of it we have transferred, a portion of it we have sold. So the portion of which we have sold will recognize a gain on that, because there is a total gain between fair value and carrying amount. The total gain in this transaction is 7,50,000. 7,50,000 minus carrying amount 6 lakh. Total gain is equal to 1,50,000. That means out of a total gain of 1,50,000, since we have leased back the asset, we have not transferred the entire asset, but we have realized a proportion of it. We have realized a proportion of that gain. At the same time, when we leased back this asset, we did not lease back the entire asset, but we leased back a proportion of this asset. So what is that proportion? So that proportion, if you notice, the carrying amount is 6 lakh. Out of a carrying amount of 6 lakh, we are retaining some proportion of it. But in what proportion? The fair value of the same asset in the market is 7,50,000 and we are ready to pay against it 7 lakh. If the fair value in the market is 7,50,000 and we are ready to pay 7 lakh for an asset which has a carrying amount of 6 lakh, how much proportion we are retaining? So can we use the fraction present value of lease liability divided by fair value of the asset? Means that we are ready to pay 7 lakh for an asset which has a value of 7,50,000 in the market. But in relation to what? The carrying amount of the same asset is 6 lakh. So we are retaining back in proportion to this 6 lakh. We are retaining a proportion of the 6 lakh. We are retaining a proportion of this total gain, and some of the proportion of this gain we are transferring. So we use this fraction, present value of lease liability and fair value of the asset, to know the right of use retained. So to calculate the right of use retained, the rights of use retained, we use the fraction carrying amount multiplied with this fraction. Carrying amount multiplied with present value of lease liability. So carrying amount is 6 lakh, and if we multiply with present value of lease liability, which is 7 lakh, and divided with 7,50,000, we get to know the right of use retained. That is 6 lakh multiplied with 7 lakh divide by 7,50,000. 5,50,000 is the right of use retained by us. So we'll fill the figure here. Right of use asset which is retained is 5,60,000. Now we are left with recognizing the gain transferred. So the gain transferred is, total gain in this transaction is 1,50,000. So out of this 1,50,000, we have retained some proportion of it. So a proportion of gain is also retained and some of the portion of the gain is transferred. So to calculate the gain retained, we'll use the same fraction. To calculate the gain retained and gain transferred, we use the same fraction. Just that instead of carrying amount, it is now total gain. Instead of carrying amount, it is now total gain multiplied with present value of lease liability and fair value of the asset. Total gain is 1,50,000. 1,50,000 multiplied with 7 lakh divided by 7,50,000 using the same fraction. The fraction which we use to proportionately divide the carrying amount into right of use asset retained and right of use asset transferred. So we retained out of 6 lakh, we retained an asset of ROU asset of 5,60,000 we retained. This is what we retained. The gain retained by us is equal to 1,50,000 into 7 lakh 7 lakh divided by 7,50,000. It's 1,40,000 of the gain retained. So how much is gain transferred? So how much is gain transferred in this transaction? Gain transferred is, total gain is 1,50,000 minus 1,40,000. That means the gain transferred is 10,000. So we need to recognize the gain transferred in this transaction. If we recognize gain transferred in this transaction, it turns out to be 10,000. So if we total up the debit and credit, we get to know the total of debit is equal to 7,50,000 plus 5,60,000 is the total of debit, and in the same proportion if we use the total of the credit, it is 6 lakh plus 7 lakh plus 10,000. So we have been successful in recognizing the sale, recognizing right of use asset retained, that is leased back, de-recognizing the carrying amount and replacing it. So what is happening? The PP item is being replaced with leases item. That it's moving on from Ind AS 16 to Ind AS 116. That's what we are doing. We're replacing in the balance sheet. The Ind AS 16 property, plant and equipment is being replaced with Ind AS 116. It may happen that this ROU asset may be also shown under the category of PP if we are planning to use this or consume this asset as part of the business operations. Or if we rent it out to others, then we may show it as part of investment properties as well. That's a separate thing to be done. Or we can show it separately under Ind AS 116 leases as well. So there is a shift in the asset from one category to another, and only in the proportion which we are retaining. So this is the dealing at market terms. This is how we deal with a sale and leaseback transaction at market terms. Now the same thing if I do, I copy paste the same thing and will change the facts for sale and leaseback below market terms. and then we'll discuss an example for sale and leaseback above market terms. So change the facts and figures, sale and leaseback at below market terms. So if I change the facts at below market terms, I take the carrying amount as same. The fair value in the market is 7 lakh, but we got 7,50,000. So suppose we are selling it for, instead of 7,50,000, we sold it for 7 lakh. Or 6,50,000. Fair value in the market is 7,50,000, and we sold it below market terms for 7 lakh. And the present value of lease liability agreed upon is 6,50,000. That will be paying 6,50,000. So when a sale and leaseback is at below market terms, we consider it as prepayment of lease. Prepayment of lease. So changing the situations, this we need to recalculate. The carrying amount is same. The cash we received now is 7 lakh instead of 7,50,000. The lease liability which we have agreed to pay is 6,50,000. Gain on transfer yet to calculate. These amounts we are yet to calculate. So the amounts according to this situation now is, we have received a cash of only 7 lakh because we sold it for 7 lakh. Right of use asset we need to calculate. Carrying amount of the asset is 6 lakh. And present value of lease liability agreed upon is that we are liable to pay for leasing back the asset 6,50,000. So the present value of lease liability is 6,50,000 which you are liable to pay. But why did we agree to receive lesser than the fair value in the market? When the fair value in the market is 7,50,000, why did we agree to receive only 7 lakh? So this difference in fair value and the difference in fair value and selling price when received less than fair value is treated as prepayment of lease. So the amount of difference is added to the lease payments yet to be made. Means that we are yet to pay 6,50,000 and we received 50,000 less. We are yet to pay 6,50,000 over the lease term. We have agreed to lease back the asset and we have agreed to pay 6,50,000 for leasing back the asset. But at the same time, we received 50,000 less. So can we say that we have agreed to pay in total 7,50,000 minus 7 lakh plus 6,50,000 is the present value of lease liability to lease back the asset. Can I say so? So the present value of lease liability to lease back the asset is actually 6,50,000. We are yet to pay 50,000. We received less. So in total, we have agreed to pay 7 lakh as lease liability. On the face, it seems that we are yet to pay only 6,50,000. So our lease liability is only 6,50,000. But in reality, we are paying back 7 lakh in today's terms. So if we are paying back 7 lakh in today's terms, we'll be retaining the asset in proportion of 7 lakh against the fair value of 7,50,000. So if we are retaining the asset in proportion of 7 lakh, that we are paying 7 lakh for an asset which has a fair value of 7,50,000 in the market, and we are retaining the right of use of an asset which is having a carrying amount of 6 lakh, we'll be using the fraction present value of lease liability. Instead of 6,50,000, we'll be using 7 lakh because that's the amount we are agreeing to pay in case of prepayment of lease. So that's how a prepayment of lease is treated, wherein we treat this prepayment as an advance payment, as a prepayment for the total amount we are agreeing to pay. We are agreeing to pay 650 plus 50. We are agreeing to pay 7 lakh to lease back the asset. So we use the fraction present value of lease liability and fair value of the asset. Why I am stressing on this point and why I am highlighting this point, that the biggest confusion arises when we are dealing with sale and leaseback transactions is that what should be the amount to be used in present value of lease liability. That's the area which creates confusion, and that's the area which many of us gets confused, that what should be the numerator to be used now in the fraction. Many of you may think that since it is given as present value of lease liability, we should use 6,50,000 as the numerator. But that's where the catch is in dealing with prepayment of lease, that the amount actually agreed upon by us to lease back the asset which has a fair value of 7,50,000 in the market, we are agreeing to pay in total 6,50,000 in future and 50,000 by not receiving the money which we were entitled to receive. The fair value in the market is 750, but we agree to receive less. So if we agree to receive less, we said, okay, let's treat it as a prepayment of lease. So the total amount we are agreeing to pay to lease back this asset is actually 7 lakh and not just 6,50,000. So this is stressed upon so that we can use the numerator as 7 lakh for present value of lease liability. Fair value of the asset is 7,50,000. So to calculate the right of use retained, the carrying amount is 6 lakh. The present value of lease liability is 7 lakh. And right of use asset retained in this case is also 5,60,000. So one part is over. I hope I can recognize 5,60,000 as right of use asset. Now the gain transferred, the total gain will be in the same proportion. Total gain will always be the difference between the carrying amount and fair value of the asset, which is 1,50,000. So we have retained a proportion of the gain in the same fraction. In the same fraction, we'll be retaining the gain, that is 6 lakh into 7 lakh divided by 7,50,000. The total gain will be replacing it with 1,50,000 into 7 lakh divided by 7,50,000. So total gain retained is 1,40,000. So the gain transferred is actually 10,000. So we record 10,000 as gain on transfer of the asset. So when we match it, we get 7 lakh cash received plus 5,50,000 of right of use asset. 6 lakh is the carrying amount plus 6,50,000 is the present value of lease liability plus 10,000 is the amount of gain transferred which we recognized. The difference between the two, if you notice, when we total up the previous part, it was giving 13 lakh 10,000 as a debit balance. Reason being, we received 7,50,000, 50,000 extra, and we were paying 50,000 extra. Now what happened? We received 50,000 less, so we will be paying 50,000 less. That in total we had to pay 7 lakh, but we'll be paying only 6,50,000. In total we were eligible to receive 7,50,000, but we received only 7 lakh. So we recognized only 7 lakh, 50,000 less in terms of receiving cash. So we are recognizing 50,000 less in terms of our liability as well, resulting having an impact of approximately 50,000 on the same. 13 lakh 10,000 and this 12 lakh 60,000, there is a difference of actually 50,000. Since we agreed to receive lesser amount, than we were entitled to receive. We were entitled to receive 7 lakh 50,000, but we agreed to receive in a below market term situation. We agreed to receive lesser amount of 50,000, 7 lakh only. So if we receive less, we'll pay less. Hope it makes sense. Sale and leaseback at below market terms. Using the same, let's formulate sale and leaseback above market terms. Sale and leaseback above market terms. So the carrying amount is, so when it is above market terms, it is treated as additional financing. In a layman's language, we can say that when we are entitled to receive 7,50,000, why would someone agree to pay us 8 lakh for it? Why would someone agree to pay 50,000 extra to us when we are entitled to receive only 7,50,000? And the present value of this lease liability is say 7,50,000. Or in other words, we can say that it was decided to pay back. The payment terms agreed upon were 1,20,000 per annum for a period of 5 years. The discount rate applicable is 4.5%, or we can say 5%. So the payment terms agreed upon is that to lease back that asset, the payment terms agreed upon is 1,20,000. So the difference in, so we'll calculate the present value of this lease liability. Total payment terms agreed upon is 120,000 over a period of 5 years. The discount rate to be used is 1 divided by 1.05. So I purposely modified it a little so that you may not feel that why I have not taken or why I have not calculated present value. So purposely I have included calculation of present value. So when we calculate the present value, we get to know that the present value of lease payments is equivalent to 519,537. So if you notice here, the carrying amount is 6 lakh. We have received 8 lakh. The fair value in the market is 7,50,000. But the present value which we are liable to pay over time is equal to 519,537. We were eligible to receive only 7,50,000, but the other party has paid us 8 lakh. Why they have paid us extra? How much extra we have received? The other party paid us 8 lakhs. How much extra we received? Extra amount we received, the entity received. And why they would pay more than the fair value of the asset in the market? So this extra payment by them over and above 7,50,000 is treated as the additional payment over and above the fair value of the asset at market terms is treated as additional financing. And instead of borrowing it from a third party, we entered into an arrangement with the same party with which we are leasing back the asset or selling it to them. We said that we are in need of money, so though you will be paying us 7,50,000, we request you to pay us 50,000 additional, and when we will be making the payments of lease to you, we'll also make the payment relating to this additional finance as well. So we decided that okay, we'll pay you 5,19,537 over a 5-year period, and we'll make the payments to you in this way. So when we leased back the asset, we did not lease back the entire value of the asset, we leased back a proportion of it, and we agreed to pay 519,537, and this also includes the amount of additional financing as well. That means how much amount we have actually paid for leasing back the asset. The amount actually paid for leasing back the asset is total liability minus additional financing, which turns out to be total liability in today's terms is equal to 519,537 minus 50,000. The amount paid to lease back the asset is 519,537 minus 50,000. This is the amount of present value of lease liability to lease back the asset. So on the face it seems that present value of lease liability is 519,537, but this contains an amount of additional financing which we need to remove to know the amount to be used in the fraction. So how much is the lease liability? So this time we received cash of 8 lakh when we were entitled to receive only 7,50,000. We received cash of 8 lakh. We were actually entitled to receive only 7,50,000. The carrying amount of the asset is 6 lakh, and the present value of lease liability is 519,537, which contains the amount of additional financing as well in it. So if we pass the entries, this time we received cash of 8 lakh. This we are yet to calculate. Carrying amount of the asset is 6 lakh. Present value of lease liability, the amount which we are liable to pay is 519,537, which also includes the amount of additional financing. But as part of our liability onto the balance sheet, we need to show the full amount, that this we are liable to pay, whether belonging to the lease or whether belonging to the additional financing. This is the amount we are paying in total, because this is the amount we have agreed upon to pay over a period of 5 years. So we need to record gain on transfer, we need to record yet right of use asset. So how to calculate it? So we'll use the same fraction. The reason for stressing upon is that here again the confusion could have been that when we use the fraction, we remember that we use the fraction present value of lease liability divided by fair value of the asset. But when it comes to using the amount for present value of lease liability, many of us commit this mistake of using 519537, which is a big mistake when dealing with sale and leaseback transaction, because this 519537 is consisting of both the components, the amount to be paid for leasing back the asset plus additional financing. So in reality, the present value which we are eligible to use it here is minus 50,000. 469537 is the present value of lease liability for leasing back the asset. The fair value of the asset is 7,50,000. So the carrying amount multiplied with 469,537, the amount actually turns out to be 6 lakh into 469,537 divided by 7,50,000. The ROU asset is actually 375,630. We use the same for this fraction as well, 1,50,000 into 469,537. 469,537. It gives us the amount retained 469,537. So the gain retained is 1,50,000 minus 93,907.4 turns out to be equivalent to 1,50,000 minus 93,907.4 is actually 56092.6 is the gain transferred. So when we record the entries here, the amount to be included as right of use asset is 375,630. The amount of gain transferred, gain retained is 93,907, but gain transferred is 56092.6. So when we total the debit 8 lakh plus 375,630, on the debit side the total is 11,75,630, and the total on the credit side is 6 lakh plus 519,537 plus 56093, 11,75,630. This is how we deal with sale and leaseback transactions above market terms, and it is treated as an additional financing. So the above market term situation was that the present value of lease liability is 519,537, but in reality we had to use in the fraction 469,537 because that's the actual amount which we are liable to pay to lease back the asset. So this is how we deal with sale and leaseback transaction when dealing with additional financing. Hope this is clear. If you have any doubt with any of the transaction, please let me know. So in this sale and leaseback, instead of directly taking the present value, we used 519,537 as the present value of lease liability, which is additional financing to be paid back. That this is the amount we are liable to pay back in today's terms. So out of total payment, we received 8 lakh. The present value of lease liability is 50,000 less what we have agreed to pay. So if you have agreed to pay 7,50,000, then this additional 50,000 is in relation to the lease liability. If I would have, instead of sharing sale and leaseback in line with what we did above, if instead of giving these payment terms, if we say that present value of lease liability in this example, if we modify it on the same lines as we did earlier, that instead of including some payment terms, example 2, on the same lines as we did above, if just for the purpose of comparison, that instead of present value, we include present value of 7,50,000. So how much extra the entity received? Why would they pay more than the fair value asset? The additional payment over and above the fair value of the asset at market terms is additional financing. So if I take this, the amount actually paid for leasing back the asset is total liability minus additional financing. So total liability we have agreed upon is 7,50,000 minus additional financing 50,000, 7 lakh. The present value of lease liability to lease back the asset. So if you would have done it in this sense, then cash account 8 lakh, right of use asset to be calculated, carrying amount 6 lakh, present value of lease liability which we are yet to pay is 7,50,000. This will recalculate again. So the fraction to be used here is present value of lease liability is 7 lakh divided by 7,50,000. To calculate the right of use retained, 6 lakh into 7 lakh divided by 7,50,000. It would have turned out to be 6 lakh into 7 lakh divided by 7,50,000. ROU asset of 5,60,000. 5,60,000. The gain retained on the same lines, 7 lakh into 7,50,000 equal to 1,50,000 into 7 lakh divided by 7,50,000, 140, and the gain retained is 140,000. Gain transferred is 10. So if I would have bifurcated in this way, then the gain transferred would have been 10,000. The total would have turned out to be 8 lakh plus 5,60,000, 6 lakh plus 7,50,000 plus 10,000, 13,60,000. In case the total lease liability was 7,50,000, but relating to the leasing back of the asset is only 7 lakh. So we would have removed this additional financing. So I purposely done this so that you can compare it with what we did above market terms and below market terms. So if you notice here, when we did it at market terms, the price was 13,10,000. The total of debit equal to credit was 10,000, 1310. Then we received 50,000 less. When we received 50,000 less, 1310 minus 50, it turned out to be 1260. So the total of, when we received 50,000 less below market terms, the total of debit equals to credit was 50,000 less, 12,060, 12,60,000. So if the market terms value is 13,10,000, now we are receiving 50,000 extra. In the third scenario, sale and leaseback above market terms, additional financing, we are receiving 50,000 extra. So I purposely done this so that we can compare. This I included so that you don't feel that I have not included any calculation of discounting to present value. So purposely I inserted this payment terms over a period of time, but I wanted to do in the manner as below so that we compare it better. So when we compare it at market terms, the total of debit equals to credit was 1310. Then we received less, 50,000 less below market terms. So it turned out to be 1310 minus 50, 1260. At market terms amount is 13,10,000. Now we received 50,000 extra. So 1310 plus 50,000 extra is 1310 plus 50,000 extra is equal to 13,60,000. So instead of receiving just 7,50,000, we received 50,000 extra on the debit side, but which also resulted in increasing our liability by 50,000 on the credit side. Everything remaining constant. If you noticed, if we received less, we paid less. If we received more 50,000, we paid more 50,000. That's the concept of additional financing and prepayment of lease. If we sold at market terms, we received exactly the same amount. When we sold at market terms, we were eligible to receive 7,50,000. We received 7,50,000, and we paid only what we were liable to pay to lease back the asset. To lease back the asset, we are liable to pay 7 lakh. That's the amount we have agreed upon to lease back the asset. So what happened when we sold below market terms? We are eligible to receive 7,50,000, but we actually received only 7 lakh, 50,000 less. So we decided that we'll pay less. Instead of 7 lakh of payment, we'll pay only 6,50,000. Makes sense? That instead of making a payment of 7 lakh, now we'll pay only 6,50,000 because from you we have received 50,000 less. In the third scenario, we lease back the asset for 7 lakh, and the fair value of the asset which we are eligible to receive is actually 7,50,000. But it seemed like a generous gesture that why they are paying us more. So if they are paying us 50,000 more, they'll be demanding back 50,000 more. We are liable to pay for leasing back the asset only 7 lakh, but they paid us extra 50,000. So we'll be liable to pay 50,000 extra as additional financing. This is how we deal with sale and leaseback transactions. The only thing you need to be careful in dealing with sale and leaseback transactions is that what should be the amount to be used in the fraction of present value of lease liability. So if we summarize the present value of lease liability, if at market terms, then it will be very clear. In case of prepayment of lease, we need to add back the amount to our present value of lease liability. The present value of lease liability, we may believe it to be 6,50,000. When it is below market terms, we may believe that we have to pay only 6,50,000, but in reality, since we received 50,000 less, the amount actually borne by the entity to lease back the asset is 650 plus 50,000. So difference in fair value and selling price when received less, then the fair value is treated as prepayment of lease. That's what we need to understand. This is treated as prepayment of lease. Why we are receiving less? Because we'll pay less tomorrow, because we said that okay, we receive less today, we'll pay you less tomorrow. So instead of paying them 7 lakh, we'll pay them only 6,50,000. But if we receive more, the additional amount we receive more will not be treated as the amount being paid against leasing back the asset. So if we receive more, we pay more. But when we pay more, we do not treat it as a payment against the lease. We say that this is the payment against the additional financing. So when we make the payment against the additional financing, we do not include it as part of the present value of lease liability which we are agreeing to pay to lease back the asset. So we are agreeing to pay to lease back the asset only 7 lakh rupees, but we will be liable to pay 7,50,000. So this additional 50,000 we are paying is for the additional finance we have received in today's terms. So this is how we deal with sale and leaseback transactions. So hope you enjoyed the lecture, and to have more insights on IFRS and Ind AS, I would request you to follow me on Unacademy and use the code ACCA Amit. You get instant discount if you use the code ACCA Amit, And if I share a brief about me, which I did not do at the beginning of the session, you can find me on LinkedIn with the name ACCA Amit Kumar. I've been training on IFRS in India since 10 years now, and I began my career into training in 2009. And I've worked with various corporates. So I worked with the first IFRS training company in India, which was Pyron Corporation, in 2009. Later, the team joined KPMG, and I was also part of the team at KPMG, was one of the lead trainers at KPMG on IFRS. I studied the first ACCA institute at Delhi, offering ACCA qualification diploma in IFRS. Had a brief stint with TMF Group as well. Until recently, I was a director with Accounting Advisory Services BDO India. Currently, I am founder and CEO of Parmisha Business School at Dehradun, and I'm offering ACCA UK qualification and diploma in IFRS, and offer it to CA final students, 10, 12 students, the chartered accountants who are willing to become ACCA qualified in future. So this is all about me. Thanks for your valuable time. Do not forget to follow me on Unacademy, and you can also have a look at more insights on Ind AS through the special classes which are delivered on Unacademy platform, and also through the various courses offered by me on Unacademy platform. So thanks for your valuable time. See you again. So this is all for the day. Thank you.